Well, good afternoon and welcome. I'm going to talk about getting ready to buy your home. My name is Tina Horne-Gomez, and I'm a mortgage advisor with BECU. I've been with BECU for the past 6 years and in the banking industry for about 26 years. I'd like to introduce my colleague, Carla Miller.
I'm Carla Miller. I've been with BECU for 9 years, and I love helping buyers get into homes. It's really super fun for me. I just like to navigate you through the whole process. So we look forward to answering all your questions today.
So today we're going to talk about what are the costs involved, budgeting for home ownership, and then Carla will cover getting your credit in order and conditional approval. There is a poll you should be able to see below, and we're asking if you know your credit score, or FICO score, excuse me. So if you haven't had a chance to complete the poll, if you could do that now, and we will talk later about the results. So we're going to talk about what are the costs involved. Some of the one-time costs that we're going to cover today are the earnest money, home inspection, down payment, and closing cost. The earnest money is a deposit that you will put down on the property when an offer is made. When the offer is accepted, you will put the earnest money on deposit, and that demonstrates good faith to the seller. It shows that you're serious about buying their property. That amount that you put down, which can vary, in the past it was 1% of the sale price. Recently we've seen earnest money deposits increase, maybe 5, 10, 20,000. It can help your offer look strong when you put down a large earnest money deposit. And that goes towards your down payment, towards the funds to close at the time of closing. Now, there are circumstances that you could lose that deposit. Not often does that happen, but that would be, in the event that you decided not to buy the home, and your agent would help you go through that process as to what help to protect your earnest money. But it really just demonstrates good faith to the seller that you are serious about buying their property. Talking about the inspection is not required as part of the loan, but it is highly recommended. And some of the benefits of getting a home inspection is you're going to find out a lot of details about the property that an appraisal, which is for value, to determine the value, won't necessarily cover. And you could save yourself a lot of money in the long run. Maybe you find out that there's structural issues, different things can come up in the home inspection. So as they say, for your protection, get a home inspection. This is ordered, basically it's an additional cost outside of the traditional closing cost. It will vary from $300 to $500 depending on what type of home inspection you go for. There's the regular home inspection, but also additional inspections like pest inspection, sewer scope. Your agent is going to help you coordinate that. The agent will typically make a recommendation for specific inspectors that you can reach out to. In some cases, recently, we're seeing buyers waive their inspection. Of course, we're not going to advise you either way, but it's definitely for your protection, but not required. So talking about the down payment, this helps you establish some initial equity in the home. The down payment will vary depending on the loan program that you're going with. It can range to the low end of 3%, 5%. The common we're seeing from 3 to 5%, which again helps you establish initial equity in the property. You may put 20% down, and that's going to vary on the program and your desire. Let's talk about closing cost. That too will vary depending on lender, the loan program. The industry average is between 2 to 3% of the loan amount, the cost that you will have. These are some third-party fees, title company escrow fees, appraisal fees. This is in addition to your down payment. So you'll have your down payment, but then in addition, your closing cost. Now, you could potentially negotiate that the seller pay your closing costs, and that was really common a few years ago, that the buyers would just come in with their down payment and the seller would pay the closing cost. But in this competitive market, we're seeing more and more buyers coming in with both their down payment and their closing cost. Let's talk about the monthly expense. Your house payment will be made up of principal, interest, taxes, insurance, private mortgage insurance, and homeowner dues, potentially homeowner dues. So the mortgage payment alone is principal and interest, and then included in that payment are your property taxes, your homeowner's insurance, and private mortgage insurance if you're not putting 20% down. Now, private mortgage insurance is required when you don't put 20% down, and that protects the lender in the event of a foreclosure. If you put 20% down, you could just pay principal and interest and elect to pay your taxes and insurance on your own, but most people will include their taxes and insurance in their payment, and then of course the private mortgage insurance if that is required. The HOA dues could be an additional housing expense, but that is paid outside of the loan. So if you are in a homeowner association or condo, you're going to have some HOA dues that are also going to factor in your monthly expense. So let's talk about budgeting for homeownership. When I'm meeting with a member, possibly a first-time home buyer, and they really don't know what to expect, if you could plan saving over the next few months to see what are you comfortable with as far as a monthly house payment. Maybe you're only paying $1,000 for rent, and you have a discussion that that new proposed payment could be $2,000 or $2,500, and you don't know if you can really afford that. I will suggest to some of my buyers, depending on how soon they're ready to buy a home, that maybe you practice. You put that much money aside every month in your savings account to see, are you really comfortable increasing your house payment from $1,000 of rent to $2,500 a month for a mortgage payment, for example. That's a good practice if you have time to prepare in purchasing a home. The other thing that is highly recommended is that you put aside money every month. Maybe you open a separate savings account that you title house savings, and you put aside every month additional money for future maintenance or repairs, as owning a home can have additional repairs or maintenance. And so a good practice would be putting down maybe 1 to 4% of the purchase price every month for potential expenses. And it's good to review your budget monthly to see that you are able to hopefully follow that good practice. I'm going to be turning the next session over to, or presentation, excuse me, over to Carla Miller, and she's going to talk about getting your credit in order.
All right, so I want you guys all to please send in your questions, because at the end of our presentation, we are going to be answering questions that you have. So it's important that we answer all your questions. So getting your credit order. Now we're going to talk about, Eric's going to jump in here and tell us what the poll ended up reflecting. Eric?
Hello, apologize for the short delay there. It doesn't look like the poll results are showing on my side. However, they should be showing on the screen.
Oh, okay. The important thing is that you really do need to make sure that your credit is ready before you purchase your home. So I know that, you can go to BECU.org and you can click on the TransUnion score, and it will tell you what your estimated score is. That credit score is a soft pull, so sometimes it could be like 50 points off, but it will give you an idea of where you're at. One of the most important things to do is actually get a copy of your credit report. There are 3 different credit bureaus that we pull from for mortgage. We pull from Experian, TransUnion, and Equifax, and all 3 will have different scores. You can go to annualcreditreport.com and get a free copy of your credit report. This is a federal law that was passed for us consumers to be able to pull our credit where it won't hurt our credit, and it allows us to be able to review it. And it's a safe site. I do it like every year. I pull it. I look to see if there's anything on there that maybe I didn't know about. Maybe there's a parking ticket that went to collections that I didn't get notified about. So it's important to check your credit and see what is on that report. So when you check it, so for mortgage, we go by the most popular scoring model, which is FICO. And it depends, it varies between 850 at the best, and then it can go all the way into the 300s. Of course, you want to have the highest score possible. So anything over 750 is where you want your goal to be. And the reason is because your interest rate will be lower and your closing costs will be lower if you have an excellent score. A lot of times we get the question, if you're applying with a cosigner and let's say your credit score is 640, but your cosigner has an 800 credit score, will we use that cosigner's 800 credit score? And the answer, unfortunately, is no. For mortgage, we use the lowest score. So it's very important for everybody to do everything they can to get their credit score up. And BECU has some really great tools to help you do that. You could even go into a branch and they can help you get secured loans and different things like that to help you with that. I've seen that work very well. You can get your score through myfico.com as well. So when you pull your credit report up, you can dispute any errors that are on the report. Just note that if you do dispute any errors, you're going to want to make sure that they are completely satisfied and the dispute is complete prior to applying for a mortgage. You want to keep proof of all of your payments that you make. You want to pay down all of your revolving credit. The rule of thumb is never to owe more than 20 to 30% of your limit of your credit card. And that just means just keeping that balance going. So if you pay off your credit card every month, then you don't need to worry about that. And then make your payments on time. So because the market is so competitive, every real estate agent that will take you out to view homes, they are going to want to know if you've been conditionally approved. And what conditionally approved means is that you have supplied the credit union all of your information and your income and your assets and everything, and we have sent it to underwriting, and underwriting has given you a conditional approval. The items that we need to have in order to get you a conditional approval is your home address for the last 2 years, social security numbers, your employment history for the last 2 years. Several times we have the question that's asked, well, what if I have a job I started 6 months ago, but it's in the same industry that I have been in for the last 3 years? Then it's fine. As long as you've been in the same industry for 2 years, then we're fine with that. Another scenario that will come up is, let's say you went to college to be an engineer and now you are been with Boeing for a year, but you've only been with an engineer for a whole year. Then we can use your schooling as to use that complete 2-year history. And then we need to know your income information. So what is your gross monthly income? And that's before taxes. We'll need to see your recent 30-day pay stubs, your current W-2s, and if you are self-employed, we need to see 2 years of tax returns. We need 2 years of full tax returns for self-employed borrowers. And then we need to know if you have any other debt that will not show on your credit report. So maybe you owe child support, alimony, taxes to IRS. We need to know about that because it will come up in the transaction. And then where is the funds coming for the down payment? We need to get 2 months of bank statements with all pages from where the accounts that you'll be using for the down payment and closing costs. You can have gift funds, and we have a gift affidavit that we will have you complete for whoever your family member. It has to be coming from a family member gifts you the funds. We can't source cash, so you can't have cash under your mattress and use that for your down payment because we have no way to know where it came from. And then additional income. So maybe you have social security, pension, annuities. If you get child support, we need to know about that income as well. Do you own any other properties? So maybe you have rental properties. We need to see your tax return with your Schedule E so that we can calculate that income for you on your tax return. So because the market is so competitive, we really want to make sure that you have that conditional approval, and it's good for 90 days. After the 90-day mark, if you haven't found a home within that time, you'll keep in communication with us, your loan officer, and then we'll just update things on our end. But it doesn't usually take 90 days. However, I've had members that I've helped that have taken 2 years to find the right property because they have a specific property in mind. And so we just stay in contact with one another, and then we just redo things once they find a home to put an offer on. So now we would like to bring Eric here and see what kind of questions we have.
Yeah, well, first I'm going to go ahead and go over those poll results. They came through for me. So the question was, do you know your FICO score? 60.4% of our participants today said that yes, they do know their score and that they have checked it recently.
Great.
Yeah, it's great information to have. 26.4% said that they know their score approximately, but they haven't checked it too recently. And then 5.7% said that they don't know their score at all, and 7.5% were curious as to what a FICO score is.
Oh, okay, great.
Yeah. And then as for questions, looks like the first question here from Catherine in Seattle is, what is the single most avoidable mistake you see that people make as a first-time homebuyer?
Not being prepared, not having the approval letter prior to finding a house. I had several people who will come to me and say, oh, we found a house that we want to put an offer on, and we need a pre-approval letter, but they haven't done the education piece behind it, and they don't realize what they need. And it's just like a panic, and you really want to be educated when you're purchasing that home.
Awesome. Thank you so much for that. And then looks like we have another question here from Steve. He says, if my FICO is above 750, should I be trying to get it even higher? Will that affect the rate?
So excellent is considered 740 and above. So you have a great credit score. And I don't think there's anything else you need to do. Just keep it right there and you'll get the best rate that we have available for you.
Perfect. And then we also have a question from Maya. Student loans seem to be influencing my credit score. How can I address this?
Actually, student loans are usually pretty healthy, a healthy credit to have on your credit report because it's an installment loan. So usually it shows that you're making the same amount every month on time. So it's not a bad thing at all for to have on your credit. The problem I think maybe recently is that they've all been deferred because of what's happened with the pandemic. So what we have to do is we have to count as in the mortgage world, we have to count 1% of the outstanding balance as a payment amount. So that kind of can maybe make it be more inflated than what it would actually be if it was your rate making your regular payment. And Tina, do you have anything to add to that?
Well, yeah, Carla, you're right. I don't know that student loans are really negatively impacting a member's credit, especially if they've been in place for a long time. The biggest thing that I'm seeing that people don't think about is the lack of revolving credit. I have found that more and more to have that high credit score, you need to have available revolving credit. So the thing to look at is, do you have, for example, Visa, MasterCard, revolving credit, credit department stores? And if you do, are they new? Or are you at the max? Because the more revolving credit you have available, the higher your credit score. I don't know what the situation looks like for the student loans, but I would highly doubt that that's going to impact unless you had a whole bunch of new ones that were just opened. But I think the biggest thing to boost your credit score is having more revolving credit available.
Right.
Thank you so much for that. Jonathan would like to know what BECU is doing to help with rising home costs. Maybe are we offering some additional assistance for down payments?
Sure. So BECU has a great first-time homebuyer grant program. And I believe, and Carla, correct me if I'm wrong, but this was in the works for years. And this is something unique to BECU. And with our grant program, we are providing 2% up to $7,500 to help towards your down payment. It's not a loan to pay back, it's a grant, it's free money. In addition, BECU has not only very low rates, but we have very low closing costs. We don't charge an origination fee. If you were to compare us industry-wide, we offer very low closing costs. So I feel that we make it very competitive for a member to come to us and try to keep that cost as low as possible. Carla, I'm sure that you have something you might want to add as far as BECU incentives.
Yeah, that grant is a really great program. Me and Tina have been with BECU a long time before the grant came out, and we would fight and fight because we needed something for our first-time home buyers. And the board passed it, and it first started with $1 million a year, and it's gone up, I think, to $3 million this year. And it's just been a great thing for us to be able to do for our members. So it's been a great. Me and Tina, we do everything we can to get our buyers in houses, and so we've used this program for many years now, and it's just been awesome.
All right, and it looks like we got a couple more questions that just came in here. So there's a question from Maria. She would like to know, are student loans taken into consideration when looking to get a loan? And I think you answered that kind of previously. So we'll go to Lucila's question, which is, what is a good way to determine what you qualify for when looking at homes?
So for qualifying, we get this question a lot, and I always laugh when a buyer. I don't laugh, but I mean when a buyer calls me and says, "I want to know how much we can get approved for," and I always say, "Do you really want to know that? How about we talk about what are you think you want to pay every month for your mortgage? Let's go there. Let's talk about what you feel comfortable paying and what are your debt right now? What's your income look like?" And then we kind of like narrow it down and well, I only want to pay 2,200. Okay, well, we know what this is for the price range you would be in. And we know we go over that details. And then I teach them how to figure out the calculation. So we go do something called debt to income ratio. We take your monthly debt payments with a new mortgage payment and we divide it by your monthly gross income. And we want that ratio to be under 45%. So we will play with those numbers too. And then we want to make sure you're going to feel comfortable with your mortgage payment. You don't want to have to be eating popcorn and top ramen. You want to be, having a life as well and going to dinner when we can really start doing that again.
All right. And then next we have a question from, I believe it's Leela. Should I have more than one loan officer?
Well, that's a good question. I recommend to members interview your loan officer. You're going to have one loan officer. And sometimes real estate agents will say, they may hand out a card for 2 or 3 different financial institutions to see what programs are available. And so I think it's a good idea, like with your real estate agent, interview that person. Do you feel comfortable with them? Do you click personality wise? Do you feel like their response is you can ask them questions, because there's not any dumb questions in the mortgage process. It's a very nervous but exciting process. And so it's really important to find somebody that you connect with. So if instantly you talk, the first loan officer you talk to and you like them and you feel like they're answering the questions, then why go out and look for another one? But you may go to a couple different institutions to see what programs are available. Carla, any recommendations on that? That's my
I always tell the buyers the same thing, is that this is the biggest purchase you're ever going to make, and the most important thing is for you to feel 100% confident with the mortgage advisor and your real estate agent. And if you don't, then you need to find the right person, because it is the biggest biggest purchase you're going to make, and you want to have that confidence and you want to have that feeling.
Yeah. And then a follow-up, kind of a common question to that last question is it okay to shop around? Will multiple credit pulls hurt your credit?
Yeah, that's really a great one. Okay, so I'm sorry I didn't bring that up. So you have about a 2-week period of time where you are able to go to other lenders and get your credit pulled without it hurting your credit. So the first lender that pulls your credit, it will hit it, just a couple hits on your credit. But then you have about 2 weeks to shop around without it hurting your credit. Same with car loans. And that's part of that whole annualcreditreport.com and the whole initiative of being able to shop, being able to know what's happening with your credit so that you're able to make a sound decision as a consumer.
Great. And it looks like Connie would like to know, how do I apply for the BECU first-time homebuyer grant?
So with the grant, basically reach out to BECU. Find a loan officer or mortgage advisor, as we refer to ourselves, and ask them about the grant program. That is something that we're responsible for. We will pre-screen you to tell you about the requirements. There is a maximum income. There are some credit score requirements. So ask for the grant. Typically, I'm sending it to a member if I know that they're eligible, and it's something that we are requesting for you. So we will let you know the list of requirements. For example, a home buyer's education course certificate's required before we close the loan, but mainly that pre-screen of, okay, is your income within the area median income that's required? Do you have the 2-month reserves? There's a few things that are required with that, but we will actually request that for you and reserve funds for you so that when you do find a house, you have that grant available.
Great. And then looks like Conchita would like to know, how long does it take to get an approval letter?
So approval letter probably takes about 3 days or so. Once you do the application online, it's a pretty quick process. And then you'll upload your documentation that we need into your application, and we'll send it to our underwriting to get a conditional approval. And that takes about 48 to 72 hours to get a response back.
Sounds good. And then we also have a question from Jade here. How far in advance before starting to buy a home, does it make sense to reach out and start building a plan with the mortgage advisor?
Well, you're welcome to reach out anytime. I have members that come in and maybe their goal is they're not going to buy for a year. That's what they say, right? So we sit down and we go over, okay, here's your monthly income, your expenses. What does that look like you could possibly qualify for? And maybe it's something that you need to work towards or you want to save. So it gives you a good focus on what you're going to work towards. I can't tell you how many people have come in and they said they're not going to buy for a year. And as soon as we go over those initial numbers, they call me back the following week and they decide they want to buy a house now. And some people aren't ready. Maybe you don't have the down payment. So please feel free to reach out to us anytime. That we're here to answer those questions. But when you do, I don't want to just pull somebody's credit just to tell them that you qualify. I will give you those preliminary numbers. But if you feel like you're ready to start shopping, your agent wants an approval letter. So once you make application, that is good for 90 days. That's how long our credit report is good for. We provide with the initial pre-qual letter, and then of course can submit to underwriting for conditional approval. So ideally, we say if you're ready to start looking for a home within the next 30 days, please make formal application.
And we do have a webinar you can take once a month. It's a 2-night series. The first night goes over the lending aspect, like what we're talking about tonight, and then the second night goes over the real estate end, and it talks about what they're responsible for and what are the laws and different timelines and things like that. So we do have that education part that's really good too, to help you before you're ready to even take the leap of even meeting with a mortgage advisor.
And is that webinar available just on our BECU.org site?
It is. Yep. Yes.
Perfect. All right. And then Kay here has a common question that I've personally encountered a few times. What is required from a self-employed applicant when applying for a loan? If there isn't much extra income due to the pandemic, for example, is it worth including it?
So for self-employed borrowers, it's really kind of a tricky time right now because of COVID. So we do have to have 2 full years of tax returns completed, and we have to have a profit and loss statement year to date, and we have to have 3 months of bank statements. So we want to show that there hasn't been any decline in income because of COVID. And so you might want to have to wait until maybe next year after your taxes are done to apply. But we can always look at the tax returns and give you an idea of where you're at. And we have a way to do a calculation without having to pull your credit or having to, get too far down the road.
Sounds good. Another kind of a common question that we have is, are you able to get your earnest money back if you end up deciding not to do the loan after an inspection?
Yes, and of course, I would always direct you back to your agent who writes up the contract for you under what circumstances you can get your earnest money back. I will tell you that over the years, very few buyers have I ever seen lose their earnest money. Now, we are in some interesting times right now, much more competitive, but depending on how your agent writes up that offer, of course, if you list in there that there's an inspection and you cancel or withdraw from the transaction, yes, you will typically get your earnest money back because you have a time frame to answer to your inspection results. And so for not passing, or you discover something that you don't want to move forward on with the purchase, you traditionally you'll get your earnest money back.
Sounds good. Looks like we had a couple more questions come in here. So Joan would like to know, I had a house foreclosure 8 years ago. How will this affect my loan approval? Also, my income will be on my retirement income. How will this affect my loan?
Well, so for the foreclosure, there's a 7-year waiting period for conventional financing. So it sounds like you might be over that 7 years. We'll have to do a little digging and research to verify when that was recorded, the deed was recorded from that foreclosure. But you can do FHA loan. The FHA loans allow for a less of a waiting period. And then as far as your retirement income, that's what we would use your retirement income, and we would use the gross amount to qualify you.
Sounds good. And then Mick has a question about our Home Rewards program, which is a great member benefit that we offer. Does the current Home Rewards program offer benefits in addition to the 0.6% rebate?
there are some additional benefits or discounts that you will receive. And I know that there's different services like helping you transfer your utilities. When you sign up for the real estate services, one of the coordinators they'll reach out to you and explain the benefits of the program and confirm that you would like to be part of the program, and of course go over the rebate, which is the biggest benefit. But there are some additional benefits and perks, discounts. And Carla, maybe you have something to add. I don't usually see that end, but I know that it's discussed with a member when they.
Yeah, the members will get an email explaining all of it, and we just received something from the person who runs the company, and I'm sorry to say I don't remember all of the details on it. I know that there's discount for a moving company and the utility setup, but if you get a hold of a loan officer at BECU, they can tell you what those are, because I believe we all got the email with the breakdown of what was included in that service. It changes from time to time. So every year it changes, and it just changed. So I apologize, I don't have that.
Yep. And it looks like we're starting to get down toward the end of the session. So let's do one more question. The question comes from Jade. Does BECU offer any first-time home buying courses people can take? Perhaps courses that could help them determine which loan is right for them? And how can we help members find realtors?
Carla, do you want to talk a little bit about the webinar? Since you have a lot of knowledge, you run the webinar.
The webinar for many years. So yeah, BECU has a webinar that I was talking about earlier. There also is a self-paced course online at becu.org, and if you go into the financial education, you can scroll and click on the first-time home buying information. It will link you to all of that. And what was the second part of the question, Eric?
How we can help members find realtors.
Okay, so if you want to use our real estate services, then we will send a referral to real estate services, and an advocate will call you and get you connected to one of the agents. All the agents in the program have been approved by BECU. They have been, we want to make sure that they're going to be a good fit for our members. And we've been working with all of them for so many years and love all the agents that are in the program. So we would be happy to help you connect you to that advocate group.
Sounds good. Well, thank you everybody who asked some questions. If you did have a question that we weren't able to get to, you can absolutely always email us at communityrelations@becu.org, and we will be more than happy to keep the conversation going.
BECU makes a great effort in supporting the employees and the activities that are of importance to us.
Giving back to our community is very important to all of us here at BECU, to the point that we've created a program titled BECU Cares. And one of the greatest elements of the BECU Cares program is we give each employee 24 hours annually to give back to programs and nonprofits that matter to them. What's better than getting paid to do what you're passionate about and helping people?
The role at BECU allowed me to give back by giving me the opportunity to volunteer at Tukwila Food Bank, where I able to partner with the different people to prep for the food and then give back to all the people who need it. I remember it was on a Thursday morning, and I did not know that it was a long line for over 300 people line up to receive food from us. And able to see that, able to realize that how people needed it, give me a thought about I want to do more and more. And BECU still able to offer me to volunteer more and more. So that's what I'm really proud of.
Annual Day of Service, which happens every year, where the whole staff, the whole credit union closes for a day, and we go out to local high schools and do financial education. And it's just really cool to see coworkers kind of break out of their shell, be put in a different social environment that might be challenging or new, and then to come to work the next day and hear all about it, and everyone always has a big smile on their face.
Really enjoy the chances that I get to teach people in one way or another, and I really enjoy being able to fill in gaps of knowledge that people have. Whether it's a member and they don't know what their account can do, and I can tell them, oh, and you can do this and that with it, and there's these extra pieces, and here's how you can build your credit rating up using this at no cost to you.
So my favorite memory would be when I helped almost an 80-year-old member who had never gone to the ATM, and she was standing in the teller line wanting to make a deposit. And I asked her, "What are you doing today?" And she said, "I'm just making a deposit." I said, "I can help you with that at the ATM." She goes, "I've never used that ATM and I don't want to use it. I've never used it, I'm not comfortable." I said, "Do you mind if I take you over there and show you how you can make the deposit?" So she said, "Okay." So I took her to the ATM, we made the deposit, and she was like so happy. She said, "You taught me something new today."
Sharing my knowledge, sharing my passion of helping people.
There is so much that we can do in order to help fulfill a need, and it really is just on trying to dig as deep as we can in order to find what those are. So that can separate us different from any other financial institution, because we're not just hitting numbers, we're fulfilling people's dreams.